I'm Governor John Rolle of the Central Bank of the Bahamas, and welcome to another episode of Harbourside Chats. Today we're on the second floor of the gallery of the Central Bank. In the background, we have paintings by Brent Malone and photographer Montez Kerr. We have some of his photos in the background. We're continuing these discussions as part of the 50th anniversary of the Central Bank, promoting dialogue on the Bahamian economy and improving the understanding of the economy. And today's topic, we're focused on the role of the financial sector regulators in promoting resiliency in our economy. With me, I'm very pleased to have representing the Securities Commission, the Insurance Commission, and the Compliance Commission, the respective heads. Christina Rolle is the Executive Director of the Securities Commission. We have Mr. Andrew Strachan, who is the Inspector of the Compliance Commission. We have Ms. Munnings-Gray, the Acting Superintendent of the Insurance Commission. It's a delight to have you all with us. Thank you for being here.
Thank you. Thank you for the invite, John.
Yeah.
So we're going to talk a bit today about various aspects about your regulatory agencies, but we want to get started by understanding a bit about your background and coming to your role. I'll start with you, Christina. You have over 25 years experience in the financial services sector, some of that before you came to the Securities Commission. Help us to understand how this prepared you for your current role.
Okay, so I did have a broad range of experience in financial services, particularly in private wealth management. I would say it enabled me, that experience enabled me to bring some added value of practicality to my role in the commission. Sometimes as regulators, we have the theory of how things are done in the industry. But I think my background prepared me in that I was able to use the experience I have and apply it to the regulatory framework. I think that has allowed the commission to advance a lot of the initiatives that we have been able to work through the years. We've also been able to engage more with our licensees and registrants. I think also that it enables us to have an understanding of some of the needs of our registrants, as well as some of the threats and some of the things that we don't necessarily see if we're only dealing in a theoretical framework. So I think the background really enabled me to merge the industry experience in a practical way into the regulatory framework.
So Andrew, I think you describe yourself as an economist, and I know you had many years in private banking and other aspects of financial services before transitioning to where you are today. What has that experience been like in arriving at your present role?
Yeah, thanks, John. I was given the opportunity to work in different roles within the bank, and this increased my adaptability and provided me with a diverse set of skills that has helped me in my current role. My approach, when I look at problem solving, I can see it from multiple perspectives. For example, I worked at two top international Swiss banks and have experience working in Zurich at their headquarters. Both was across the street from each other. And one of them, I worked and learned in most of the departments there, and also in some of the departments across the street. I actually worked for both of them at one time, and then also in London and New York. So that gave me a good understanding of how the financial system works and financial institutions. My experience with client management, relationship management, and risk assessment also has been helpful.
Thank you. So we have a good cross-section of age represented here today, as well as we have good gender balance. And so turning to you, Dina, you're earlier in your career than some of us, but you're also proving that youth is not a barrier to being in leadership role. Help us to understand what has been your transition like through the insurance sector, and give some advice, if you could, for the young aspiring professionals out there.
So, Governor, I'm happy that you asked that question. And on the basis that, I mean, obviously, like you said, we have gender as well as age difference. However, bear in mind that I would have started my career in the financial services sector at the age of 16. And so working at the Lloyd's Bank at the time, that was an early introduction to me. And obviously things in regulation and financial services sector looked a bit differently. I often tell people, while, I may look young, I still remember when incorporating a company meant walking to the registry to pay your fees to incorporate. And so again, you're talking about time spent in the industry. Mm-hmm. I would have started out early days in the bank. However, I've had the opportunity to work in law firms and also in compliance and risk, not just in the Bahamas, but also in the Cayman Islands, and studied in the US and the UK. I think for that allowed a level of diversification in terms of not just what it was that I wanted to study, but it was the area that I wanted to work in. And I knew early on financial services sector was that. When you talk about young and aspiring, it's all about knowing exactly what you want in life and going after it. And so every opportunity I had, I was intentional as to where I wanted to be. Coming into the regulatory space, it was simply a decision at that point. And I sit amongst the great, but particularly I pay homage to Ms. Christina Rolle, that gave me the first opportunity in the regulatory space. And in that space, I realized oftentimes in industry, we didn't get it. So coming into the regulatory space, I wanted to ensure that I was bringing not just my personality, but the experience that I got in the industry to say what Ms. Rolle said. We knew the theory, but the practical is what was really needed and what I felt like, I wanted to hone on. And so I wanted to bring practicality. I wanted to bring the youth. I wanted to bring the knowledge and understanding that I've learned from the industry. And I wanted to make a difference in terms of our approach to the industry. Coming now into the insurance sector, it's totally different from your traditional financial services product. But I will say, oftentimes when you find that you're actually being pushed outside of what you consider your comfort zone, it means that you're growing. And so the message in all of that is be intentional, plan, and don't be afraid to take risks. And so that's been my journey to the insurance industry.
Thank you. So we have stakeholders that are both local and international. And I think even if you're looking at the central bank, there's a fairly good appreciation from the outside if you're in this business, right. What the relationship is like with the central bank. But let's talk a bit about what the average Bahamian should understand about how your regulatory agencies impact them. And I want to continue with you, Dina, and help us to understand, what does the Insurance Commission do?
Okay, so the Insurance Commission is responsible for the licensing and regulation of all insurance companies and intermediaries in the Bahamas. As you imagine, we are unique in the sense that this is the only jurisdiction that actually has an intermediary market, which means that you cannot go directly to your insurer to purchase insurance coverage. You have to go through an intermediary, through an agent and a broker. And so when you look at the impact that it has on day-to-day living, everything that is represented here, insurance comes through, whether it's central bank and the incorporation or establishment of a bank, you need insurance. Whether it's securities commission and you need to license, it's professional indemnity insurance. Is on the compliance commission side, the professionals. So insurance is the bedrock of everything that you look, touch, and feel. When we look at the general public, to drive a vehicle, you need insurance. To go to the doctor, you need insurance, or you would hope to have insurance. And so what we do is to ensure that we're protecting our stakeholders. So while, yes, we have a vested interest in our insurance companies and we don't want them to fail, again, we look at our stakeholders, i.e. the public, to ensure that what we're doing is not adversely impacting any of their contracts or their livelihood.
Thank you. And Christina, insofar as the work of the Securities Commission is concerned, I think the Commission has had, quite a high international profile recently around some of its activities. But can you relate to how the Commission's work is felt in the Bahamian marketplace?
So John, I really like how you phrase that question, because sometimes I think we forget that we do serve the average market price and not just the 1,300 or so people who are in international financial services. And so what I would say for the very average Bahamian, we are concerned about protecting them as investors. You know, we're concerned about, that's our primary concern. That's our overarching umbrella concern. And so what that means is that we're concerned about the information that people who are soliciting them to make investment in certain companies are putting out there. We're concerned that the information that is being put out is accurate, that it is easy to understand, that it is sufficient information for the average person to make an informed decision about what investments that they can do with their disposable income. We're also concerned that that average person is not, I guess, exposed or harmed by various frauds and scams that are out there. And so you would see the commission doing a lot of investigatory work, trying to I guess, curb a lot of the fraudulent activities. Mm-hmm. And so we're also concerned about the interaction of the average person when they go to a financial service provider. You know, we're concerned about their interaction with their banks. We're concerned with their interactions with their broker. We're concerned that those people who are interacting with them, giving them advice, giving them services, are properly licensed and properly managed and are controlling their risk so that the average person on the street is not harmed. Okay. So again, all of that is under the big umbrella of investor protection.
Yes, and I'm glad you ended up concluded by saying investor protection, because I think, you know, when we look at the way the central bank operates versus the Securities Commission, what is very much appreciated is the role that the Commission plays in protecting the investor. And the way I like to summarize it is your focus on making certain that people understand what they're getting into, but they're also protected from, you know, fraud that might cause them to lose money that they're investing.
Absolutely.
And I think that's important. For the central bank, we think about it from the point of view also of protecting the depositors, who are ultimately the primary stakeholders in terms of the banking system.
Absolutely.
So,
and we have different methods how we go about that protection.
Yes. Now, Andrew, I'm going to admit that I did some research before recording this event just to get fully understood on the Compliance Commission, right? And some very interesting things that the Compliance Commission does and your stakeholders. But can you explain to us, you know, who your regulated stakeholders are and what the Compliance Commission does?
The Compliance Commission supervises DNFBPs. That's an acronym that causes confusion sometimes, but it's a worldwide classification, designated non-financial businesses and professions. So those include lawyers, real estate brokers and land developers, accountants, dealers in precious metals and stones. And we have a website that provides quite a significant amount of information on what we do. So we advise the public, those who are out there listening and want to learn more, that you can blog Compliance Commission of the Bahamas, and you'll see that website pop up. So the Compliance Commission is an AML supervisor. So we supervise these sectors for compliance with their AML obligations. And those are defined in Section 4 of the FTRA 2018 and are aligned with the Financial Action Task Force services, Financial Action Task Force standards. So the services that the lawyers provide that are supervised are not all of the services like divorces or litigation, but it's specific to buying and selling real estate, creation of legal persons and arrangements, provision of registered offices. And for real estate, it's aligned with the Financial Action Task Force standards, which They have to comply when they're involved in buying and selling of real estate for the vendor and the purchaser, and also land developers are also captured in the legislation. So for dealers in precious metals and stones, it's when they're involved in jewelry transactions, but there's a designated amount for meeting the AML obligations, and that's $15,000. 15,000 transactions. It's not cash. It's 15,000 transaction where the AML obligations kick in. So the role of an AML supervisor is crucial, because we're a major part of our role in what we do is, to prevent money laundering, terrorist financing, proliferation financing, to ensure that our registrants understand the risks that they face, that they apply appropriate mitigation measures, that they're compliant with the AML obligations, and where they're not compliant, appropriate measures such as enforcement. Compliance Commission has teeth now. We didn't have that before when we had the mutual evaluation in 2015, but all of the regulators, that's an area that's been strengthened. And that's not the first step that we use, go immediately to enforcement. It depends on the type of breach, but the severity of the breach. But there are penalties that are applicable, and they are significant.
So you mentioned proliferation financing. I think most people haven't heard that term before. They hear a lot about money laundering, and they hear about terrorist financing. What is proliferation financing?
Yeah, that's weapons of mass destruction. Acquiring, the financing and accumulating, weapons of mass destruction. So that's proliferation financing. Financial Action Task Force has updated their standards to include proliferation financing risk assessments as part of the risk assessment, which wasn't applied before. So that's a new requirement that we're adding to our training and education for our registrants. And basically, the proliferation financing risk assessment is similar to a risk assessment where you cover clients, geographical regions, delivery channels, and transactions, products and services. You would look at the proliferation financing risk factors. Financial Action Task Force has defined the proliferation financing risks within the context of a potential breach of a UN sanction notice, which may be related to the registrant not having screening mechanisms or not receiving the UN sanction notice on a timely basis, or evasion of the onboarding process by the registrant, whereby they weren't able to pick up that the entity that they onboarded, is sanctioned or related to proliferation financing.
I think Andrew made some important points, but if I can add one thing, which is that in as much as the Bahamas is an international financial center, and we have products and services that are used in proliferation financing, for example, mutual funds, crowdfunding, other products and services that are used in proliferation financing, then we also have to ensure that none of that is channeled through the Bahamas or through legal vehicles that are registered in the Bahamas.
And another way that I would summarize it is that we have a duty to ensure that whatever monies we're handling are coming from clean sources.
Yes.
And they're being used for clean sources. So when we talk about terrorist financing, we're talking about a use of money that may be flowing through. And when we talk about money laundering in the general sense, which is an element of proliferation financing, is a part of that. And similarly, terrorist financing can be considered a part of that. Again, it is ensuring that you have transparency around where monies are coming from and where they're going. But before I return to this, Andrew, I wanted to ask you this. The Compliance Commission does not license the entities that you supervise. Whereas in the case of insurance, securities, banking, and related areas, that is also a part of the regulator's function. How does that impact the ease of your job?
Okay, this was an issue in the last mutual evaluation, because that was an area of weakness, because we didn't have legal powers, to force entities that were conducting the business where they had to meet their AML obligations, to force them to comply with penalties. But in the 2018 FTRA, that was implemented, and Compliance Commission was involved in advising the AG's office at the time, because we did a research on the how that is applied in different jurisdictions. So now it's not a significant issue, because in law, registration is mandatory with penalties. Compliance Commission has an enforcement program and a detection program, an ongoing detection program, and methods that we use to detect firms or companies that are conducting the business but are not registered. Market entry controls are also very strong for the sectors that we cover. For example, real estate. To sell real estate, you have to be licensed with BREA. To conduct legal services, you have to be a member of the bar. You have to be licensed with BICA, the accounting self-regulatory body. And then we also have fit and proper checks. One of the key requirements for the NFPPs and financial institutions as well is to have measures in place to prevent criminals or their associates from acquiring an ownership interest or senior management positions in the entities that we supervise. So we also have fit and proper measures. We also have assistance that the fit and proper from the Compliance Commission side, where we review the persons that have ownership and senior management. We do background checks on those. We are on them. And then we have assistance from the Royal Bahamas Police Force that also conducts background checks. And we have other measures in place. So we have strong entry controls now. And we also have legislation with teeth where we can apply significant penalties if they're caught conducting the business and not being registered. So that has been captured.
Yeah. And
for the most part.
So all of this effort around anti-money laundering, anti-terrorist financing, and other illegal financial flows is coming out of the 40 recommendations that the Financial Action Task Force has put out there. And the Bahamas has been singled out as one of the few countries in the world that is compliant or largely compliant with those 40 recommendations. And we had a rough go at it, but I think given all of the various changes we've done from time to time, including some of the recent legislative changes, we are at that state. And it relates to the experience that we have. If you're opening up a bank account, and we talk about know your customer and due diligence, we see it in the securities sector, we see it in insurance. And I think people are sometimes surprised that they experience it when they're dealing with their accountants and their attorneys and their realtors. And it's not necessarily looked on in a pleasant way, right? But speaking about this know your customer system, the customer due diligence, etc., how is it that in the securities space, for example, Christina, what is it that the average person experiences as a part of the customer service relation that relates to this framework?
Okay, so in the securities sector and with securities that goes into banking a little bit, and it goes into investment funds and investment management accounts and so on. I think what they interface with mostly is the account opening process and how the FATF recommendation trickled down into what are know your customer requirements. And so that is what they experience. Now, I think, though, in the Bahamas, we have, and for some time, processes that are perhaps a bit more onerous than they need to be. Certainly, we as regulators, we enforce the need to comply with the FATF standards, and we enshrine those FATF standards in the AML CFT rules that we both produce and publish. But I think the application of those rules, I think for the average person in the Bahamas, they experience a disconnect when they reach the service provider, and they all often tell of a very painful experience. I mean, I think, I remember being at a FATF plenary meeting, and a guy from France, he was complaining that, it took him 5 days to open a bank account in France. And I'm like, listen, if you open a bank account in 5 days in the Bahamas, we would be doing cartwheels. Talk about 5 weeks and upwards just to open a simple bank account. And so I think that for the average person, what their experience is a trickle down of those FATF requirements in the Know Your Customer requirements. But I do think that on a practical level, the local institutions are not implementing a risk-based approach, which they're entitled to do, and they're applying those standards in a very onerous way, and that's what's happening.
What are some of those specific questions that a securities firm is asking a client that look like it has an anti-money laundering component?
Okay, so for example, and I would give you an example of something that was perhaps onerous. Until about I think it may have even been as late as last year or year before last, we had in our AML requirements something that required an address verification. That is so. I'll tell you full disclosure. I don't have a utility bill myself that can accurately verify my address. It can come close. I can put about 3 of them together and then produce an address verification, but no one utility bill can do it. And so just asking someone to do that can sometimes prove very, very difficult in the Bahamas, where we don't have street addresses on our utility bills all the time. But when you go back to the FATF standard, the standard doesn't ask for an address verification. It actually only asks that the financial institution obtain contact information.
And the way we've
Right.
evolved in trying to define it for our domestic banks is that, do you have a means of contacting the individual?
Exactly.
And so that can mean even a cellular phone, email, whatever means you're using to communicate with the individual, those are adequate. But it's taking more time than we would like to see it become fully ingrained in terms of the practices. And so it's more than just the heads of the institutions agreeing with the concept, but that it has to trickle down in terms of the operations. And I mean, that's an area that we focus upon. Now, so I experience it in banking, but less often, but I also experience it in insurance. And I experience it in the context of personal real estate transactions. But just speaking about it from the insurance perspective, Dana, what are some of the questions being posed to people who have insurance policies that look and feel like AML related?
So I think I may be a little different on this topic, and reason being is I'm a former assessor. And so when you talk about FATF standards, I've had the ability to act as an assessor or act in the capacity as an assessor for CFATF. What that essentially means is I was one of those persons that took on the challenge as a financial expert to go into another country to assess their financial system, as what happened to us in 2015. If we want to take it a step back and look at when those rules for FATF was amended and the methodology was established in 2013, we would have just recently had our mutual evaluation in 2015. So we would have identified gaps, and the Bahamas sought very feverishly to ensure that we would have, kind of closing those gaps through legislation and through other acts. However, though, coming into the insurance industry, because of course now when you talk about FATF, you talk about guidance on securities and guidance on the TNFPP sector. But when you talk about insurance, you have to appreciate that FATF has guidance as it relates to long-term insurers. So you have your life insurance policies, your annuities. The difficulty is, again, we're not in an industry that just speaks to long-term, it speaks to general. And so in the absence of there being any specific guidance for the general insurers, you mean your insurance companies that deal with private vehicles and public vehicles on the road, when you're talking about general coverage, there is no FATF guidance on that. And so in the absence of the Insurance Commission having to publish guidance regarding AML that will cover the general insurance sector, compliance is not seen as the sexy word, in the insurance sector, because again, they're looking at it as onerous. Mm-hmm. You're talking about salespersons that are selling insurance to the general public. It's one thing to go and say to another professional or someone who has an appreciation for KYC that I need your ID, I need your address verification, I need your contact details. Even for me, sometimes when I enter an establishment and they ask me for all those documents, I have to remind myself, hey, you know about compliance and you know this is normal. But for the average individual, I can imagine it's like, why do I need all of this? And the same thing we're seeing in the insurance sector, because again, you're talking about persons that do not have the appreciation for where the country was in 2015 when we had our mutual evaluation, what 40 for 40 actually means. We're, I think, the second or third in the region for 40 and 40.
We're one of three
in the world. One of three in the world.
We're one of three in the world.
But everyone in the Caribbean constituency is crying because we're doing so great for this checklist.
Correct.
And it's taking, in some cases, weeks to open up an account.
Correct.
Because of all of the checks that are going into the process. And so we say, look, if we're scaling this based upon how much risk the customer potentially pose, then we have to be careful it's not an overkill.
I agree.
When you're bringing customers on board.
Yeah.
But, and I want you to weigh in on this, Andrew. What does that experience look like for somebody in the Bahamas who's going to purchase a piece of property in a real estate transaction? I'm not talking about the non-Bahamian that is coming in and buying property, but a Bahamian buying property and going through the real estate process.
Yeah. So I think, just to give a little background before I, address that specifically, we've had a sea change, with the sectors that we supervise over the years. The real estate and legal, which is the two primary sectors that we supervise, and they're material in terms of the economy. Real estate contributes about 17% of the GDP, and central bank deposit flow study shows that the deposits in the real estate and the legal sector is significant in terms of the overall deposits in the system, and a lot of that is involved in real estate transactions. So what the Financial Action Task Force what they've been emphasizing is the implementation of the risk-based approach, right? And in simple terms, the risk-based approach, essentially involves identifying identifying and assessing the areas that are high risk, and the ones that are lower risk, right? So that you can allocate from a country level and from a supervisory level, and also from the firm level, you can allocate your resources more towards the higher risk. So when it breaks down to the individual, client, right? We train our registrants on applying a risk-based CDD, for example. So that's how the domestic KYC would be involved. So, if it's a domestic client that's working at a government agency and a private sector company and they're getting salary deductions, that would be a low risk. So the CDD requirement there would be, lower, would be simply standard CD, gathering the required information by law. If the client is a PEP, or involved in cash-intensive business or involved in proliferation financing related businesses, then they would pose a higher risk, and then that would involve, it would be referred to as enhanced due diligence. So the DNFBP sector is not as far along, not only in the Bahamas, but internationally, with their sophistication and knowledge of all the obligations. So we have to work much harder than you do, at the central bank, for example, where you have, I'm from international private banking myself. They have PhDs, in compliance, in the financial institutions. Here, we're dealing with real estate brokers and lawyers. They have a business, they have a payroll, that they have to meet. Compliance is important because we've stressed that, if there's no compliance, there's not going to be any business. So switching from domestic to international, when an international investor comes here, they want to know that the law firm or the real estate firm that they're dealing with, is regulated. They want them to verify. We get calls from our registrants, because they say, well, our name isn't on the registration list that's posted on the website because someone called and said that they didn't see it. So they've understood, the importance of compliance. You look in the newspapers almost every month, the real estate brokers are saying, what a great market it is, all the investors that are coming into the Bahamas because of stable political climate. It's a beautiful place to live. It's very attractive. It's, close, to North America. We have the airline routes. So, if we turn that into, if there's a black eye, if the cases of money laundering and real estate has been highlighted and known, as a sector that's vulnerable, to money laundering because, real estate appreciates in value. You can do high value transactions like, 40 million. We've had 40 million transactions here in the condo market, 40 million for one condo. So, you could plow significant illicit funds derived from criminal activities through the real estate sector, and that is known. And that's why, it's important that the sector is properly supervised and the controls in place. The Compliance Commission, we conducted a research paper. I love research. We used to do research together at College of the Bahamas back in those days. So we prioritize research. We've done a study, and we've had assistance from the central bank. And we've done a study on AML controls in the real estate sector. So we've analyzed, we took a look through, and the research paper is posted on our website. It's right on the homepage. And we, looked over the trends in the real estate sector, the size of transactions, private islands, domestic, inventory. And we looked at the controls in the sector at each stage of a real estate transaction. So, this was an important study in gaining an increased understanding of the risk in the sector. So this is understanding of the money laundering terrorist financing risk is one of the major deficiencies in a mutual evaluation. So presently, the Bahamas is conducting a national risk assessment. That should, I don't want to preempt, but should be issued this year. So it's important, when we talk about risks, that our registrants and the general public understands the risk-based approach. And going back to your KYC example, that's where the risk-based approach is not being applied appropriately. And, we have also a group of financial service regulators. We're also working on a guidance note on PEPs, you had some comments on that. That's in draft
Yeah,
stages.
so PEPs is
But-
the painful point in the Bahamas around those who are classified as political persons,
Right.
and what that experience looks like.
Yeah, politically exposed person.
Yes.
So that's another area where risk-based approach is not being applied. Any PEP is viewed as high risk, right? Whereas the standards only require foreign PEPs.
Mm-hmm.
So you apply a risk-based approach.
Yeah.
So all of this is relevant, but we find for our registrants, it's particularly with the larger firms, because we have a lot of small firms, and real estate. Some people retire and they're doing it for like a sideline, and you have a lot of small firms, but obviously the major international side is dominated by a handful of firms.
Mm-hmm.
It's been a sea change. They have a much greater appreciation for the importance of compliance, and that they understand that without compliance, there's not going to be, you can't do the business anymore. That could be a major derailment to business.
Okay. So one last general question on this topic of anti-money laundering, due diligence, so that we can move on. We know that we can improve upon how the risk-based approach is applied, but to the average industry person or user of services, again, it is seen as a nuisance and as a bother. And to some extent, some might think that we do this only because it's an international obligation and we want to look good by international standards.
Mm-hmm.
But how does this system help, if we're talking about resiliency and vibrancy of an economy? How does addressing these kinds of issues promote resiliency and vibrancy in your economy? Is there an economic upside to what we're doing?
Sorry.
No, go ahead.
Okay.
Go ahead.
So let's just look from the insurance market. Again, I said when we speak about AML and compliance, it's not considered a sexy word. However, though, when we looked at the last gray listing or blacklisting, if there was not one industry that had a greater appreciation for AML compliance and even ensuring that what we do itself in the Bahamas is almost like foolproof, it was the insurance industry. And simply because, again, when we looked at the blacklisting and we looked at other jurisdictions that the insurance industry actually do business with, i.e., reinsurers are located in Germany. Because of that blacklisting, Germany implemented a law that pretty much said that they cannot do business with any country that appears on the blacklist. With that being said, we cede most of our risk, and when I said we, insurance companies cede most of their risk to reinsurers in Germany, which essentially meant, and if we want to break it down to how does that affect us from a financial stability standpoint and even resilience, when we look at Hurricane Dorian, and we look at the fact that that was estimated about $3 billion. Let's say each of those homes had insurance and they had to then claim through their insurance companies. Their insurance companies had to go to the reinsurers in order to pay that benefit, right? Now, if we were blacklisted and we were not able to get off that list, what essentially would have happened was we would have either been in the position where we wouldn't have been able to have a transaction with Germany and those reinsurers, or even with the reinsurance relationship that we had, we would not have been able to claim the benefit from the disaster or the triggering event that happened.
Okay.
And so when we speak about resilience and when we speak obviously about, how things in other jurisdictions may affect what is happening locally, the insurance industry had to learn how to be resilient, okay? When we talk about climate risk and we talk about these events that happen from hurricanes and catastrophe risk, we have to be resilient. There's no other choice but to be resilient. And so what I found to be the best method in terms of delivery to our general public, but particularly our insuring public, is through education, through consumer awareness. It's through saying to them, listen, we appreciate, we're all, and when we look at here, sit amongst us, we all at one point in time touch insurance. We're all insured, we all drive vehicles. And so, unlike probably other industries, the people that work at the Insurance Commission have a greater appreciation as well, because we know that's the industry that we work in, but we're also insured, we're policyholders as well. And so, again, it is resilience. We had to learn how to be resilient. but we had to find creative ways in how we would do business and ensure that there was no disruption to what was happening in our economy.
Thank you.
So John, I would take your question from a different angle. I think as regulators, all of us are concerned with ensuring the integrity of the markets. And we're not just concerned with that for its own sake, but we're concerned with it so that good businesses can thrive. And so in terms of how all of this AML, CFT impacts the resiliency of our economy, is that we have an interest in seeing good business thrive. And the best way they can do that is by introducing good practices. That's the absolute best way to do that. So it is a good practice to know who your customer is, to know their sources of wealth, to know how they may be spending money from time to time, how they may be interacting. It's good to know that they're not involved in criminal activity and that you're not promoting criminal activity, because all of that at the end of the day undermines the economy, right? In terms of PEPs, PEPs is a very, and when I say PEPs, I mean politically exposed person. That's a very thorny subject in the Bahamas, because you only have to go about 2 deep and everyone is connected to a politically exposed person, right? This is a small country. But the reality is that persons who are politically connected are so exposed to corruption, and we're not making any suggestion that politicians are corrupt, but the exposure is there. And so you want to ensure that that level of activity is not taking place within your business and within the jurisdiction.
And so far as the politically exposed persons are concerned, if the financial system does its job the way it should, you become a gatekeeper of sort, and you sort of back up the sort of safeguards and oversight that the public would expect of the business that's being carried out on their behalf. So I think that's important. But I mean, we still acknowledge that in the Bahamian context, we need to tailor. And tailoring is another way of understanding risk-based. You want to tailor it a lot more to what is relevant in the local context.
Yeah, it's applying the risk based on size, nature, and complexity, right, of the organization. I'm not going to take all of my resources and apply it to something that does not require it.
So I'll just add, if you would allow, John, the one point, the financial system and depends on integrity and trust. So that's very important, integrity and trust, because the public, has to be confident. You talked about central bank, deposit insurance. I remember when I worked downtown years ago when the bank failed over there, and I looked out my window and I saw all the people, gathered out front.
Yes.
So, confidence at all levels, from the DNFBP sector, for the legal sector, for the real estate sector, confidence and integrity for investors to confidently invest and to put their money in financial transactions. There has to be a high level of integrity and trust. And that is really one of the key goals of the Financial Action Task Force, is to protect the system from abuse, by money launderers, terrorist financing and proliferation financing. So providing that framework to, prevent the abuse of the system by criminals, that is really central, to what we do.
Yeah, and the fact that the financial institutions are on many levels serving as the gatekeepers or the guardians. My personal example was always insistent on going through a financial institution to do a real estate transaction. Why? Because of the due diligence that they would ensure that took place around the title and all of the other issues. Whereas even in cases where you may have said, okay, well, it's a low value transaction, you can pay for it outright. Are you going to be as thorough? So I think that is a good example in terms of some of the cost of doing business being subsumed in terms of the kinds of things that financial services institutions do for their customers. But I want to transition now and talk a little bit about some of the emerging trends and issues. I know we don't have too much time, but Securities Commission has been doing a lot of work, Christine. We know about crowdfunding, the digital assets in a very general sense, as well as the legal framework that's in place. And so now Bahamians are becoming more aware, for example, about cryptocurrencies and crypto assets. And even some of the exchange control liberalization that the central bank has undertaken, we sort of step back and we give people a little bit more free rein to do activities in this space. But what have you seen in terms of activity or involvement in the digital asset space by Bahamians?
So that's a very interesting question, because the truth is, John, I say that we don't really have a local market for crypto in the Bahamas. And what I mean by that is that the activity among Bahamians in the digital asset space, that is buying and selling digital asset tokens, is negligible. I know that when the FTX collapse occurred, there was much talk about Bahamians being able to withdraw their money. I question how many of them were actual Bahamians versus Bahamian IBCs, because the reality is that the activity among Bahamians in the digital asset space is negligible. And I guess the next question on that would be, well, then why do we need to regulate digital assets if the activity among Bahamians is negligible? And the answer again goes back to the fact that the Bahamas is an international financial center. And as an international financial center, what we are exposed to is the risk of an entity coming into the Bahamas and setting up shop without a regulatory framework in place. And so to address that, we can either go the route of banning it altogether. We could take a wait and see approach, which to me, I usually categorize a sandbox as a wait and see approach, or we can regulate. The reality is, if something goes wrong, the only option of the wait and see and the regulate approach that enables you to take action is the regulate approach.
Okay.
The wait and see approach don't really give you the tools you need to take necessary action. And so when we decided to develop DARE, we looked at those options. We looked at some of the issues that was facing the Bahamas as a financial center, and the reality is we had a lot of inquiry about people who were interested in coming to the Bahamas to do business in the Bahamas. And so without a regulatory framework, it's difficult to say, okay, you can't do that that type of activity, particularly with digital assets, where the taxonomy is not exactly the same as the taxonomy of the securities industry. And so, I mean, and that may be a little bit complex for the average person in the audience, but it essentially means that if we cannot bring someone into our regulatory perimeter, then we cannot be sure that we can enforce against them if the time comes. So we have to make sure that we have a framework that brings them within our regulatory perimeter. And so that's why. And just to close this point, we talk a lot about FTX. We talk a lot about what happened. If we did not have a framework to address that, then, I mean, the fallout for the Bahamas would have been devastating.
So, is there a focus or emphasis that you would like to see around the investor education side of crypto assets and Bahamians?
Yes, I think there is a lot of what I call speculative activity in the crypto space in particular. And I think Bahamians really need a whole lot of education on the speculative risks And also, I think also we also need a lot of education on the tools and products that can be enabled on the blockchain itself. Because I think the blockchain itself is a wonderful tool and it can have many great applications, but I see a need for a lot of education in the space and for a lot of Bahamians to perhaps get involved and to be able to build their own applications in that space, as well as education needed in the investment side of things.
Thank you. So before we get into closing, I want to talk briefly, Dina, about insurance. And there's a parallel because in the case of banking, the concerns are around, the branch network, accessibility on various levels, the counter versus the ATM, the fees, etc. But now there's a lot of concern about the cost of insurance, particularly given the climate-related element, how hurricanes are more intense and premiums are going up. And so what is the Insurance Commission able to do around the cost of insurance?
So now that's tricky. When we look at our legislation as it speaks now, it says that in the event that any of our licensing intend to increase costs on a product that is currently approved by the Commission, then they would have to seek the Commission's approval and obviously have some actuarial science or study that goes behind it. However, though, the Commission also recognized that we're in a hard market. And when we speak about hard market, we're also talking about capacity issue. I would have said earlier about in terms of us being blacklisted and how that looked with our German counterparts from the reinsurance area. But when we look at where we're geographically located, our reinsurers, the same reinsurer that insure the Bahamas, reinsures North America. And because of where we're geographically located and given the amount of hurricanes that have either been predicted or that would have taken place, the reinsurers have taken the point that they were either de-risking or what they did was held us at capacity. And so just drawing an illustration, just say if they decided in the Bahamas that they would cover $1 billion in insurance risk, if we got to $1 billion, then that meant we could not write any more insurance because, again, that was the only capacity that they were offering. So in the insurance space, while we are in a position to look at rates of products that are brought to us and decide from an actuarial standpoint whether or not that rate can be justified, we also appreciate the market that we're in. 2022, 2023, from our insurer standpoint, has been the hardest years in terms of renegotiation treaties and conversations with reinsurers. And so it is either one, do we absorb the cost? And in most cases they have, because they've seen a 30% increase in reinsurance costs. In most cases they have, but in other cases they pass that increase on to the consumers, which is 15 to 20%. Now that is onerous on obviously the insurance public, but we appreciate again the hard market that we're in the ability to actually get insurance. And so for us, it's almost either you pay to play or you just find yourself unfortunately in a position where you cannot get insurance, particularly for catastrophe insurance. Now, the cascading effect, and I'm happy that you would have mentioned that, is that the insurance industry, while you have a home and you can get a loan for a home, if we're in a position where we're in a hard market and we have capacity issues, you can purchase a home, but are you able to get the insurance, that catastrophe insurance, to cover the home? And that's where the real question comes to play. What can we do, not just as an industry, but as as a jurisdiction, to ensure that while we may not have the ability to lessen the cost of insurance premium, that we have the ability to look at the financial sector as a whole and see where there may be cascading effects and how we can rectify some of those where we're having our insuring public not able to access certain things.
But
so Dana, I would just counter by asking him what he's going to do with
banking. So yes, because now that's the hot topic of it.
We're not going to shy away from it. But I think we recognize that you got to fix,
Yeah.
more of the infrastructure
Yeah.
that services are being delivered through to reduce the cost.
Yeah.
And like it or not,
Mm-hmm.
you got to go more digital
Yeah.
in terms of the services delivery. And I know all of the concerns around what is broken in terms of the energy space or the telecom space, but I think you still have to push ahead because you can't wait until one thing is finally fixed before you start on the other because the world is moving ahead.
Yeah.
And you need to understand and be acclimatized to the way of doing business on the platforms.
Yeah.
But one last question for you, Dina.
That's fine.
What do we do to get Bahamians to take up more hurricane insurance? Once the mortgage is paid off, a lot of people stop getting coverage. Yes, it's costly, but what can we do about it? And the central bank would also like to see more insurance taken up for various economic reasons.
Yeah. And so the reality is, again, I mean, when we look at the insurance industry, apart from the fact that compliance is not sexy, insurance and the purchase of it is not to our general public. They see it as a necessary evil. They see it as something that they just have to pay. So you pay your insurance on your car because you know you can't get it licensed unless you pay it. But then some people only insure to the point where they can get it licensed, and after that they don't pay it anymore. And that's why we hear the high population of individuals that are driving without insurance. When we speak about the banking sector, we appreciate that we have, when we look at the insurance industry, we realize that we have a low penetration risk. And that could be based on so many things. It could be on perception, opinion, and views of insurance from the insurance public. It could be based on the fact that, we have not done enough in terms of educating the public on the importance of insurance. But then again, when you look at persons that had insurance on their homes, and once that mortgage finished, they would stop paying because, again, what they would have saw is either they shared a relationship with their financial institution, which meant that if they did not have the money to pay, the financial institution took on the burden of paying it and just adding it to the monthly payment. And so as far as they're concerned right now, they do not need insurance. We're saying to them that you do. And reason being is if you looked at anything else, Dorian was a perfect example. While we did not experience it in Nassau, we would have experienced it in our family of islands. And the importance is in the absence of insurance or even underinsuring your home or whatever it may be, you are not going to be able to get the value for something that you consider to be your most valuable asset. And so we say to them, yes, we know that it's expensive. Yes, we know in some cases it may even be hard to get because of our capacity issues. But we're saying the importance of insurance, we cannot stress enough because if there's a disaster, unfortunately, you find yourself in a position where you're having to rebuild without any assistance from this insurance policy that would have assisted you. Or if you underinsured, it meant that you would not get the true value of that asset that you hold so near and there. So again, from a regulatory standpoint, what we can do is ensure that we are making sure that our insurance public is aware of the risk related to not being insured, but also saying to them and reiterating the benefits of insurance, particularly when you're talking about your most valuable asset.
Okay. So I've saved the hardest question for the end. So we have here 4 financial sector regulators, and depending on how you look at the Bahamas and the issues, you could come up with 3 or 4 other entities out there that have some regulatory responsibility for the financial sector. And even in our stakeholder groups, you would find that there are some entities that are doing business where they're interacting with more than one of us at any time. And so there's been a call from time to time that the Bahamas should consolidate the number of regulators, or at least think differently about how they organize and how they focus their efforts. Is there value in establishing a single financial services regulator for the Bahamas, or rethinking the way we do regulation? I want to start with Andrew.
You're very kind.
Yes.
Proliferation financing. Okay. So the Financial Actions Task Force, which sets the standards for combating money laundering, terrorist financing, and proliferation financing, they do not issue a recommendation on the supervisory approach. It depends on a variety of factors, and it's left really to the country. The focus is on outcomes and not processes. So whatever supervisory regime is decided upon, there's strengths and weaknesses. There's some weaknesses with if you just have one. For example, that involves conducting risk assessments across a variety of different sectors, and it's some areas like DNFBPs may not receive the attention that they would receive by having like a separate regulator that would understand the risks and characteristics that are specific to DNFBPs. Like you said, you even had to conduct some research to understand about DNFBPs. That's not well understood. So what's important, to achieve, the outcome, that we want, which is, the upcoming mutual evaluation, to have great scores on very high levels of effectiveness, because the focus of the mutual evaluation is really going to be on effectiveness. Don't forget, but I mean, technical compliance, we've already achieved that. So, the focus will be on effectiveness. What's important is the coordination between the different units, the different agencies, central bank, securities commission, insurance, compliance, legal, FIU, AG's office, that the risk in the country, is well understood, and that's being communicated to the stakeholders and to the general public as well. So the coordination between the different agencies, whether it's through one or through what we have now, it's really important, because what's ultimately important is the understanding of the risk, and that has to be done fully through, with the police also involved, through the cooperation of all the agencies. And I think we've achieved quite a lot from 2015. That was my first experience with the mutual evaluation, and preparation is gearing up at a much higher level than we had. So the cooperation financial action task force, that's one of the critical areas they will look at, is how the different relevant sectors are cooperating. They're not going to come and look at whether you have a unified regulatory regime or if it's split up, because they're focused on outcomes rather than processes. So I think, to answer your question, I think we need to focus on outcomes rather than processes.
Any thoughts, Dana?
So truthfully, I didn't give much thought to it, but I must agree with Andrew regarding focusing on the outcome versus process. When we look at other jurisdictions that may have an FSC type model, we also recognize that they may have a strong insurance market, but not a so strong securities market, or they may have a strong banking market, but not a very strong insurance market. I think for the Bahamas, as an international financial center, what we have done great is ensure that we saw the development of respective industries within the financial services sector. So we've seen the development of the financial services sector or industries in the financial services ecosystem, in the sense that we've seen the development of the insurance sector, the banking sector, securities, and the like, even the DNFBP to a greater extent. And I think with that, with the separation of the regulatory agencies, it allows for a specialization and understanding of the risk associated with that particular industry. Not to say that it will differ if there was a super regulator on FSC, but I think what we have done was we've been able to get to a place where we have identified our risks in the respective sectors, and we've been able to ring fence them. And I think the model that we have now has proven fruitful and has proven successful. I'm not that old, but I think I still come from that generation that says if it isn't broken, why fix it? What I can see, though, is through greater collaboration, there can be a unified approach to regulation. It could be the ease of doing business. When we look even at what we require our licensees in terms of having to report to separate regulators, while it may not be an amalgamation of the regulatory framework in terms of bringing one super regulator, it can be the amalgamation of our processes to make the ease of doing business easy and more efficient for our sectors. But I don't see where the system that we have now, where it creates any issue, or it creates it pretty much puts our licensees in a position where they cannot do business efficiently and effectively.
Any thoughts, Christina?
Yeah, so I actually probably have quite a bit of thoughts on this topic, because we have had occasion, because we do, I think between the Securities Commission and the Central Bank, we get a lot of feedback from the industry wanting to push in the direction of a super regulator. And so we have had occasion over the years to look at this issue and to really contemplate it in the context of the framework of the Bahamas. And some of the things that we found is that, the Bahamas is not unique in its central bank being both responsible for regulation and monetary policy. So the central bank feeds a lot into monetary policy, and that's an important point to note, because a lot of the jurisdictions that we look at that have a super regulator, just one super regulator, their central bank is probably not fully in control of monetary policy the way our central bank is. And so the super regulator structure is perhaps within that context, and I think more investigation into that needs to be made. There is an example of a regulator that went the route of a super regulator, and then they found out later on that it didn't work, and that's in the UK, where they went the regulator of an FSA, and then they had to split between an FCA and a prudential authority. Personally, I like that model. I like the model where there are two regulators. One is a conduct authority and one is a prudential authority. I think that all of our regulation can fit within those frameworks, and I think that, I understand the points that Dana and Andrew have made about, what the international bodies would look at. But I think that there are other factors involved that have to be considered for the government, for the policymakers. And those factors have to do with the efficiency of resources, whether we're being efficient in our regulation as well. And so I think all of those things need to be looked at. But I certainly think that there is room for the Bahamas to take a very comprehensive approach along two lines, as opposed to one.
No, thank you very much. I do think the issue of resources and efficiency of the process will matter much more for a small country like the Bahamas than, say, United Kingdom or the others. And then you have the example of the Cayman Islands. Well, the Cayman would not be fully on the monetary policy side,
Exactly.
having the need for the central banking policies that we do. But I do think that in the Bahamas' case, industry wants to see more cohesion and less duplication in terms of effort and reporting and the costs around that process. So it is definitely a conversation that we need to continue.
Yeah.
I didn't get the impression when I looked at the period from 2000 to present that there was any sort of political differences of views on this. But it's just something that is spoken of from time to time, but never really moved ahead or we haven't looked at it very deeply. So this brings this episode of Harbourside Chat to a close. And I want to thank you, Christina, Andrew, and Dana for being our guest today. It's been quite an informative and educational discussion.
Thank you too, John. And I'd like to take this opportunity to congratulate you and the Central Bank on your 50th anniversary.
And thank you also. We extend greatest appreciation for the opportunity to share this event with you.
Thank you, John. Thank you.
Congratulations.
Yes, and thank you. So in June, we are going to continue our learning series with our flagship event, which is our memorial lecture. And we look forward to inviting members of the public to be a part of that lecture series. And I also want to let our audience know how much we appreciate the partnership with ZNS TV for the broadcast of these Harbourside chats. We also have a partnership with Guardian Radio, so you can also hear these episodes on Guardian Radio. You can also tune into the Central Bank social media pages, and you can see some of our past episodes. If you have any questions or comments on the series, please send us an email to harboursidechats@centralbankbahamas.com. And we certainly look forward to seeing you on future episodes. Thank you.